Robin Limited pays annual corporation tax of 30% with the tax liability being settled in the year in which it arises. Do you know why the next part of that information is given? The extension after the 30%, you see the extension with the tax liability being settled in the year in which it arises. Do we understand the perspective why the examiner brought that part?
Yes, yes.
What is
It
the
is not
perspective?
accrued.
Sorry?
It's not accrued. So it affects the cash flow in that particular year.
Exactly. We are looking at cash flows. Remember, we are appraising a project. And as you appraise a project, you want to get what is my net realization? What is the net, returns that I will get? So you must make sure you take care of that charge, that tax charge immediately to see the effect it has on your cash flows. Our interest is on cash flows. So that's why that second bit was brought on board. So let us charge our 30% on our earnings so that we charge it as tax. And we want to bring it also as an expense. So I will say there, 30%, I'm putting a negative because I want to bring it in parentheses. We multiply that by the earnings before interest and tax. There. So I have my tax charge for year 1 as 2744,850. I just drag it to year number 4 and I have that. That will give us profit after tax. That gives us profit after tax. How do we get profit after tax? It is the net effect of earnings before interest and tax. Then we take care of tax like that. I drag to year number 4. So I have my earnings after tax. So for those members who attempted it, do we have the same profit after tax?